And hello once again. Welcome to, and I'm just making sure that you can actually, yeah, you can hear me. Welcome back to another episode. Holy shit, this is turning into a great day of Vishal and Company. And I've got the mic blocking me just so you can see my pretty face. We're missing both Maddie and Joseph. Joseph is sick, and Maddie has got an audition for a lead in a MOW. Look at her go. The woman is just cranking. She's getting out there, getting busy. But anyway, here we are to discuss some things that we've been seeing recently in the news. Inflation's crazy. Consumer sentiment is down. Musk is selling Tesla shares, and Disney fucking dies on the Dow. All right, Vishal, take it away, my friend. Tell us what's going on.
Thanks, Galen. So I think we should start here on the consumer prices, on the CPI, also, inflation data, and let's talk about this, and we'll take a look at what the charts are telling us. I think this is really interesting about what the US dollar, what gold, what the stock markets are telling us. So yes, consumer price index surged 6.2% from a year ago in October, the most since December 1990. And if you strip out food and energy, the increase is the fastest gain since August of 1991. I think the most important thing to understand from this data point is, inflation is the largest since 30 years, but the rate of inflation is actually the highest ever in recorded history. So inflation is climbing faster than ever, and I think it has a lot of people a bit worried, well, maybe not a bit worried, but maybe quite worried, because what's the Fed going to do, right? And I say quite worried or a bit worried because remember, the thing from the Federal Reserve, they're still telling us that this was all part of what they basically predicted, right? That inflation is going to be moving higher and higher and higher, but don't worry about it. We have it under control, and it's only transitory by next year, mid of 2022. This inflation will still be tapering. So you're at this point where, inflation is probably going to come in higher and higher and higher. You're going to see some people saying, hey, the Fed is wrong and they should be hiking rates as quick as possible to try to combat inflation. And then you'll have another group of people saying, oh, no, this is what the Fed predicted. So don't worry, this is the transitory inflation. And we'll wait till next year. And sure, inflation will be getting worse and worse. But don't worry about it. We trust the Fed. So when you have something like that, you got to take a look at the markets, right? See what the money is doing. SPY, the S&P and other markets, they did fall a bit. They had a couple of red days this week. We'll talk about the Tesla sell-off because we know Tesla's part of the S&P and the Nasdaq, so that makes things a bit more. It muddies the picture here. But the S&P did fall, and when we talk about inflation, I think we have to look at two other markets. Three. Let's throw in the bond market. Bonds, the yields did rise after the inflation data, so maybe people are predicting or thinking that the Fed's going to have to start raising rates sometime to combat this inflation. But if that's the case, they're going to have to admit that it's not transitory and they were wrong. So that's a whole different story there. But I think this is where the real story is, right? Gold and other commodities, but gold is generally seen as that inflation hedge. And we'll look at silver too. But gold finally broke above 1830 here, which was a resistance zone that it stayed below for basically 4 times this year. It tried to break above it. We've climbed back above it, and nice green candles here in the past week. And we're expecting gold above 1900 going forward as long as we stay above this 1830 zone. And then take a look at silver. There she goes. We've been bullish on this for quite some time, actually, when it was at $22.70. And we're at 25 right now. And I like the technical pattern that we have here, a bit of a inverse cup and handle here. So I'm liking what the metals are doing. And I'm thinking this is more to do with the inflation case. And then finally, just to end it off, this is where it gets really interesting. That's the US dollar chart, because there's 2 ways of looking at this rise here in the dollar. By the way, dollar, gold, and silver were moving up together, which confuses a lot of people because people think of gold as the anti-dollar.
Yeah.
In negative correlation. So when gold goes up, the dollar goes down, and vice versa. But when there's periods of, I like to call it a confidence crisis, or when people are very uncertain about things, they'll run into gold and what presumably is the best fiat currency, which is the US dollar. And we have the dollar rising here, so it means one of two things, or maybe both together, but we can talk about that. Either money is running into the dollar because it's fearful, they're worried about this inflation story, and they just want to run into the quote unquote, I guess, safe haven, because the dollar is technically the reserve currency. Or number two, people are now front running the Fed tapering much faster and raising rates. And just in that interest rate differential, if you believe the dollar, or if the Fed's going to raise interest rates to combat that inflation, then the dollar would be rising against other currencies. So very interesting take here on the dollar. And I got to tell you guys, man, when I see this weekly close, if we get a close like this today, we still have about an hour and 10 minutes to go in the market. But if we get a close like this on the dollar, we're in a dollar bull market, man. We're going to get another move up to 97.
So what does this mean for crypto?
So let's take a look at the crypto charts. I think that's the only one where gold and the dollar were moving up together. Crypto hasn't been moving up with both of those other assets. So is it a risk or a safe haven? Is it an inflation hedge?
I don't think so. It was
No?
a big speculative asset, and I think
Yeah.
people are beginning to realize it isn't a safe haven, at least as yet.
Not yet.
It needs to achieve some sort of other status, at least as a stable asset. It's not going to do it as a currency because it isn't a currency, guys. I'm sorry, man.
I think Galen, like you brought a good point here because I was expecting, okay, I think Bitcoin did go up, but I think it only popped that one day, but it hasn't followed gold and the US dollar in the last 4 days where it just drifted lower. And if it was going to be one of those safe haven or inflation trades, you would expect it to be following, I guess, both the dollar and gold there.
Now, do you think the inflation now is setting people in a bit of a panic? Are we going to see that start to happen within the marketplace? Now, does that mean that they're going to be heading for assets like commodities, gold and silver, for instance? Or does that mean that they're going to push even harder into the speculative assets, hoping that they're going to be able to pull their butts out of the fire and make a quick buck at the same time?
I think it'll be a bit of both. I think the smart money and the money that's a bit more longer term will be looking at the commodities, and they're going to be like, hey, look, we should maybe buy these physical hard assets. And again, Galen, it's not just gold and silver, but we're seeing rising wheat, soybeans, lumber, uranium, a whole bunch of stuff that's not even related to the supply chain issues, right? So I think there is this commodity / hard asset, money's running into those two things, and I personally believe it's an inflation hedge or a protection. But I still think, a lot of other people, like the retail crowd, they're still going to be saying, hey, let's buy the dip because the Fed's going to be changing their tune and they're going to continue the supportive policy. But, that might change if they actually do taper like they say they're going to do. So I think it's going to be a little bit of both. During inflationary periods, the stock market actually does do well because you're trying to make a return higher than inflation. And the best place to do it is usually the stock markets.
Usually the stock market.
Yeah, but the thing is that we're already operating on a false stock market to begin with. And so the second, that it doesn't matter how much on paper you own until you actually pull it out and are able to use it in the economy, right? And as soon as they pull that plug, we're in for one hell of a show because it's just going to build on itself. Now, if we're going to talk about the supply chain being broken at this point in time, it's always been relatively broken in the sense of how it's been set up because it's always been rather tenuous as far as the connections are concerned. But now, it's not just the fact that the supply chain's broken up. It's kind of like this philosophy or this expectation that we have that when when oil gets in short supply, it goes up at the gas pumps, and then when we get more of it, it still stays up at the gas gas station, right?
Yeah.
And now a bit of that is just price gouging because they're bastards and they like to do that. But the problem is that it's not just the actual event that is taking place right now. It's the knock-on effects.
Yep.
It's how it spreads out into the rest of the industry. I have a friend who is in the import-export business, and we were discussing just the other day that his company's operating at razor-thin margins right now,
Wow.
almost at nothing, because
Yeah.
it costs so much now to bring things into the country because of the delays at the border. And because of just the fact that it's costing more. So they, in the sense, are really feeling the bite, and they can't necessarily pass it on to the customers. So we're going to see, I think, something that's going to last well into 2022, if not a little bit longer. This isn't a temporary thing. This is going to drive up inflation, and people are now going to start to have to pull their money out of the stock market to pay for the things that they actually need to buy. And in doing so, we're going to see a bit of a vicious circle. The more stocks you pull out, the less what value the stock is going to be, thus increasing the rage to go get your money out of the stock market before you lose everything you've invested. And we're going to see a real pitting out. Now, Vishal, you were saying there's going to be an or. You tell me that.
I was going to say, or alternatively, it forces people to borrow more money. But in order for that to not impact the economy too much, you'd have to keep interest rates still low. So it's weird because the Fed is sort of trapped, right? Where if they raise rates, it might cause issues because, people have already been taking a lot of debt through the pandemic. And if inflation is going up faster than expected and they can't make that money, a lot of people will have to borrow that money, which also means that, it's in the best interest to keep rates low.
Now, here's the thing.
Bit of a pickle.
Yeah, no, exactly.
Yeah.
The only friendly money that's been out there has been corporate cash. Right? The retail individual, the ones going in, the retail lending is at an all-time sort of interest high. It doesn't leave open the option for you and I to go out and get a loan to cover our expenses. We won't have that option. Companies may still be able to go out and get their less than zero interest,
right.
but we're not the recipients of that. That's not going to happen for us. And what nobody really is talking about is that we're the ones that drive the economy still. It's not the corporations. So when we can't get our money to cover our bills, we're going to start to see stuff fall apart right, left, and center. And it isn't going to be pretty because we haven't been playing smartly. We've been playing like the institutions, but since they're the house, they can afford to do it. We've been playing the stock market like a fucking casino. So
it's kind of funny if you look at, I use Apple as the best case scenario where if you think of a hypothetical best company in the world, usually people, throw names out there, but Apple is usually one of the first names. And alphabetically, it makes sense as well. If you look at their balance sheet, what they've kind of done over time is I think in 2012, they had close to 100 million in equity. So this is shareholders' cash invested in the business and close to $60 million in debt. The situation has reversed where this year they've got 60 billion in equity, and close to 100 billion in debt because it's easy for them to raise debt. They're a high quality company. The Fed has made it so easy for them to lever up, and they're buying back a lot of their shares because they're making so much cash. The consumer was still, for the last 10 years, consumer confidence has been pretty high. So people are buying, they have disposable cash. But the issue was not how fast that money was going through the economy. There was a kind of a delay at how fast that cash was, the cash was churning. And then, not to jump the gun, but then you hear, U.S. consumer confidence, or the sentiment is down in the U.S. On the opposite side, in the West there, in the East, companies like JD and Alibaba just had their Singles Day. It's basically just this worldwide 70% discount. Yeah, basically. And I think JD made 50 billion USD in the day, and Alibaba made 84 billion.
Both of them are dropping earnings next week too, so I don't know if that factors in.
It just goes hand in hand. I think they both actually delayed their earnings, analysts thought they were coming on the 11th, and they said they're going to come on the 18th. But it just kind of shows you that both sides are going through this kind of consumer crisis that's kind of different. Whereas a lot of the buying power in China is like Galen is saying, is corporate, and a lot of that does lead most of China because the population is kind of in poverty. But in the US, it's the opposite, where the consumer part is kind of the largest, and if their spending reduces, this kind of has a long-lasting effect that we won't feel now, but it kind of, the domino effect kind of happens over a couple quarters. And if you notice, a lot of the companies talking about right now is that demand shock, experiencing that demand shock that they won't be able to recover from, especially if their margins are already pretty low due to cost increases and due to cost increases and the COVID costs that are associated with all the restrictions and stuff like that are coming through. So it's a pretty weird situation. Comparing the two sides, you can kind of see what's been driving both. Mm-hmm. And China's been really focused on prosperity for the small businesses. The US has been really focused on prosperity for the large institutions, forgetting that the biggest buying power is the US middle class. And I think Canada is kind of in the middle, kind of in the middle of that, where the largest portion is consumer buying. But I don't know if consumer buying in Canada is still at the same clip it was previously. Yeah.
So I think the reason also why we're getting a big day in China in regards to the Singles Day and stuff is because they're still waiting for the other shoe to drop for Evergrande. Evergrande managed to scramble yet another debt payment. Well, not the debt payment, but the interest payment. But still, there's no guarantee that we'll be able to continue to do so. It literally is clawing, living hand to mouth and getting by the skin of its teeth.
Yep.
So
that's true.
I don't know if what we're seeing yet in China is actually a true picture of what is actually going to happen or what is actually at play. I think they're still living a bit of the lie right now.
Well, I was just going to say too, I'll just show you guys, but I wrote it today on my agriculture piece, but the government has been urging their people to stockpile on winter food supply. So that could be a bad sign. Maybe
that is a bad sign.
Yeah. Maybe that's a bad thing. I mean, it could be supply chains. It could be maybe they're speculating on a Taiwanese war, or maybe they're expecting an Evergrande
collapse,
a market collapse. So.
Yeah. No, in any way, shape, or form, that kind of warning is not boding well for the economy.
No, especially when you tell people it's pretty scary stuff.
Time to stock up on your food.
That on
we were kind of talking about this earlier, where we were talking about the Fed or any institution that kind of governs. In these kind of situations, their focus is on trust and keeping the faith, or I don't like using this term, but keeping the confidence of the market strong. Because they know there's not much they can do usually, but in situations like this, there's very little ammunition left for them to react to anything that does happen. So what I do find like the most interesting thing is just the dynamic and the conversation that the Fed is having with the market right now. It's the most interesting, hubris thing I've ever witnessed.
Oh yeah, it's crazy.
It's like you're ignoring what's in front of you and just saying, just continue to be like those horses that have those blinders and just focus on what we're telling you and things will be okay. And then, things happen in the market and people trying to, like you're saying earlier, trying to front run the Fed. But they're like, we're tired of listening to you. Your rhetoric.
But see, that's the thing, right? The thing is like, how much longer do you think people are going to trust the inflation is narrative story, right? Again, the Fed has bought themselves some time because they are saying that, oh no, we told you it's going to be here till mid 2022. So even if inflation rises, that's the interesting dynamic to see how, and we'll see it through the stock market, through the bond markets, but we'll see if the people are actually believing what the Fed's saying or if they're doing something else with their money.
Well, do you think if consumer confidence is low, does that already mean that they're starting to go, whatever?
Yeah, exactly. Yeah. That was quite telling because, for the past few months, we've been hearing about a strong economy and retail sales, consumer spending increasing, and
Completely.
now all of a sudden it's
I
flat.
think I think we're in for a bit of a change. I mean, with the, as you said, the consumer confidence being low. A couple other things happened this week that were rather monumental. GE splitting into three different
Right.
companies. Johnson and Johnson splitting
Johnson &
into
Johnson.
two. When is Tesla going to fucking split up?
Well, let's do you want to talk
I mean,
about Tesla first or
Amazon.
Disney?
When is it going to split up? Facebook. When is it going to split up? Right?
True.
These are really big questions, and a lot of what their value is based upon is a conglomerate kind of valuation that's really based on nothing. If Tesla were to split out its solar panel business, it wouldn't be much. And in that point, they would no longer be able to include it in the insane valuation that they currently have that Musk is taking advantage of. I'm sorry, I'm going to now, just because we got into it, I got into it. Anyway, I want to talk about this for a bit. Musk went on to Twitter, and in a PR grab, I guess you could say, he decided to ask people if he should sell 10% of his shares. He really didn't give a shit of what people on Twitter thought. He just wanted to warn people because he has tremendous amounts of debt right now that he has to start to cover that are coming due, and all of his loans have been collateralized based on the amount of shares that he owns, and so he has to now start making good on some of this. And so what he wanted to do is just sort of like, everybody, I'm a good guy. No, I'm not really a good guy. I need to sell some of my shares, not for environmental purposes or to buy into charities or anything. I need to pay off my debts. But I'm not going to say that. I'm just going to, since I got so much flack about not selling shares to cover the world hunger problem, I'm just, going to say vaguely that I'm selling shares. And you can surmise that since I got so much flack about this other stuff, that this is what I'm doing it for. It isn't. What I really want to center on is not the fact that he's only sold 5.7 billion shares when he said 10% of his stock. That's not 10% of his stock. That Kimball, days before, right before he made the announcement on Twitter that he was going to, sell shares and he wanted advice from Twitter users on whether he should or not, Kimball went and sold $100 and some odd million worth of shares himself. Now, whether this was to catch it at its height so he could buy in at a dip, because it certainly dipped when that announcement was made, or whether he just wanted to get out while the getting was good, he's still committed insider trading. I'm sorry, if the only official outlet you have to announce stock sales is Twitter, because that's it at this point. He has no PR department or investor relations, really. People depend on his Twitter announcements to be official company announcements. And so basically he let Kimball make a couple $100 million off of it before he actually made the announcement. And the SEC, where are they on this? This is ridiculous. It's getting to the point of insanity. I mean, we've got now Rivian coming on as an IPO. It's now worth more than Ford, which was one of its investors. Ford actually makes cars. Rivian, although I like the idea and they do have a truck, they have yet to really sell this thing and actually be worth anything near the $90 billion that they're valued at right now.
They're the second most valuable automaker after Tesla now.
That does not make any sense whatsoever. And this is because of Tesla. This is the insanity that we are faced with. And this is the reason why the stock market is going to fall. I'm sorry. I mean, what are you guys' viewpoint on this?
Yeah, I think you're right, and I won't focus solely on Tesla because people will be like, oh, that's one case example, but there's so many cases and examples of companies that have come out, and the valuations just do not make sense. There's just so much money flowing that anybody and anyone's uncle right now is like, you know what, I'm an IPO. This daily of mine, and I sure as hell will make a quick buck from it. And hey, they boom, 100 million valuation out of doing nothing but selling $30,000 of sandwiches in the full year. And that's kind of the market we're in now. But it's funny on Twitter. This is kind of still Elon related, but he changed his name for a few days. I think from Elon to Lord something.
What an ass.
Lord. Yeah, some reference. And obviously, like you said, Galen, he is a public figure. A lot of people follow him. Every one of his moves, there's conspiracies about them. A day later, a coin or a coin was released in that name, and it was up 300%. I'm not saying he was involved in it, definitely not. But what the hell?
Yeah.
how, how do you look at that and you're like, this is a market that's working, that's that's working well? It just kind of shows you we're at the tipping point, and companies like this coming out and Elon selling stock is, like Peter Schiff is saying, is probably a great move. If I was in his shoes, and we've said this on the show before, I would sell.
Oh,
I
yeah.
would sell a large chunk. I would start selling a large chunk. He's been in the industry for since 2004, and then he took the company public. He knows what the manufacturing industry looks like for automobiles. He knows the kind of money that they're going to be making. He sees the business.
Yep.
We can't be like. There's no way he doesn't, factor that in. He, as much as he is the poster boy, there's a chairman there as well, chairwoman, I should say, who's in charge of executing some of the stuff that they do. There are people telling him that this is a high valuation. We should probably raise cash and, invest more or whatever. And he's like, yeah, great. We'll raise some cash, issue shares, but I'm also going to take off some from the table. Mm-hmm. I think it's the right move. And if, as an investor, and you're looking in, your company is not only issuing you shares, a lot of shares, which in effect is diluting you. It only makes $1 billion a quarter. Your CEO takes out $4 billion, $5 billion in stock. That is more cash than the company has made in earnings ever since it's been a public company.
That's to cover his fucking loans for SpaceX.
Just to cover. I saw a tweet. It was like, "Oh, is SpaceX running low of cash?" I was like, Twitter's an evil place. But yeah, I was like, if this is the market you're operating in, and you feel these valuations are justifiable, I sure as hell think, you have a lot of ground for upside. But if you look at this and you're like, what's rationally going on here is not to go back and pinpoint them as the devil here, but the Fed has chucked a bunch of money at people that already had nothing to invest in, not only individuals but companies as well. And now that's self-perpetuating. Okay, now we have all this cash. What do we do with it now? And to make worse, even like Apple, for example, it buys its own shares, but they say themselves that the price is pretty expensive. But they can't do anything else with the money. They might as well.
What happened to the days where share buybacks were illegal?
Yeah, they were. What's her name? Elizabeth Warren is an advocate for that. She's trying to bring it back.
I think it's a good idea. There's no reason why a company should be able to self-inflate the value of its shares.
She says it's stock manipulation.
It is. It's blatant fucking stock manipulation.
Yeah, she's not a fan. And then on the opposite side, all the corporate leaders are like, I don't know what you're talking about. We use them to increase shareholder value. It kind of reminds me of that. The stock option.
How about selling more product? Why don't you actually develop a business? Why don't you actually develop value rather than pretending you have it?
Yeah, that's what I've figured out now. And I sat with myself in a dark room and I thought about this excessively because I was like, why am I not able to operate in this market? What is going on? But I took an Uber to downtown, and the driver was a Tesla owner.
Yep.
So out of curiosity, I asked him, "Oh, you like your car?" Blah blah blah. And he's like, "Yeah, it's the future of cars and etc." And he's telling me his, same thing you hear from most of the diehards.
Yeah. Yep.
And I asked him, "Oh, you know what? What do you think about all the metaverse stuff and everything that's going on around, with tech? And do you think it's changing how we live?" And he's like, yeah, definitely. We're not going to be living the same way we're living in the next 5 years, etc., because of Tesla. And I'm like, it's a manufacturing. It just manufactures the car. Once you're out of your car and you're in your home, it's not going to change how you chew gum. I was like, I don't know what expectation you've attached to this.
It's a complete lie. It's this myth that somehow he has instigated a technological revolution, and he hasn't. In fact, he's regurgitated technology. He hasn't done anything new. I mean, exception of the fucking door handles. But I mean, and that was him, by the way. That little boffo was all him. So
it's a weird one.
Yeah.
GE and all of them separating, I don't blame them. They know the market
Yeah.
will accept whatever they're selling. And if I was a CEO in that situation, I would do the same thing. I would do the same thing. And kudos to him if he's able to sell 20 billion of stock without
Yeah, man. Yeah.
plummeting this thing to 800 or $700 per share.
We probably should be around.
I want to jump again into the Disney thing,
please,
because it kind of leads into where I think corporate America is kind of heading. So they missed earnings because of the parks. The park growth is slow, but not because there's no interest. Well, now we know consumer sentiment is low, but it's because there's still capacity restrictions on a lot of their business,
and that's
so the costs are still pretty expensive. They're increasing the number of users on their platform as well. So Disney Plus, I think, has 70 something million more users, and it had 50 million last year. But they're making less sales or less dollar per active user on average, and this kind of spooked the market, and people sold the stock. To make matters worse, during the earnings call, the CEO started talking about the metaverse. In reference to Disney being at at a pivotal point to take advantage of the metaverse. And if anything has happened in the last few years relating to Facebook, that is one of the most upside down things that I think has come out.
Well, it's Zuckerberg trying to reinvent himself and his company in order to achieve the popularity that is now waning for the platform and his services, right? Times are changing. People are becoming more tribal in their social interaction. It's not necessarily all on Facebook. It's now sort of on TikTok.
Different flags,
yeah, exactly, right? And I think it'll go even further, where, as I said, tribal, to literally just having groups of people that are just connected directly to each other. Broadcasting to the world has a certain sort of narcissism to it that you think you're actually doing it, but you're not. Most of what you broadcast on social media has already been curtailed to hit a select few, whether you've chosen those guys or not, right? The algorithms are already in place. You're never really hitting everybody anyway. So what's the advantage of being on this huge platform other than, I guess, somebody being able to easily find you? I think in the interest of privacy and data protection, you would want to go to a smaller network that's actually even developed by you. So something that's blockchain based, where you've got it's my group between my families and my friends, people that I actually fucking talk to, and we'll share stuff back and forth without having that data being sold. Or if it is sold, then at least I'm getting paid for it and I know where it's going.
True. Yeah.
Right?
That's true. It's kind of the whole taking control of your actual privacy. I think it's something that popped up in 2018 that was popular, and then it just kind of died down because they, changed things up, and they said, the EU put out that thing. And I think we all got that notification on your phone.
There was all sorts of companies at that point in time. I talked to them that were trying to do completely sort of sandboxed networks, right? Where you weren't sharing all this information. But I think they got their timing wrong. And the world was still under fascination of this idea of the celebrity spotlight. That somehow if I got on Twitter, I could speak to the world. Well, I mean, occasionally, if you're lucky enough, you'll go viral and something will happen. But usually that's because you're stuffing pennies up your nose. It's not basically because you're actually doing something of any worth. It's because you're doing something so fucking ludicrous that everybody has to, going past a car accident, has to take a look at it. Right?
Yeah.
And TikTok, what is that? Dances and zodiac predictions of stock.
Yeah, basically. And that's kind of where I'm like, if this is, this is a company that's been around for I don't know how many years. Disney is well established. They had a record of, performance. And Vishal earlier was talking about they stopped paying the dividends, which made the stock plummet pre-COVID. And it just kind of, I can't blame them for, reducing the dividends. It makes sense. The parks are pretty expensive to run. They have to put quite a lot of cash back in the parks just for things to make sense. But it's now this corporate turnaround that's happening all over, kind of what Galen alluded to, where the meta thing is just them saying, we want to separate our core assets from our core company, and just kind of, when people talk about Facebook, they can shit on the app, but don't talk about the corporate level. GE, same thing. It's pretty large when you think about it, but now it's like, let's separate those individual pieces so that anything bad that's happening with GE, or being called a boomer value stock, let's separate that and have something else that's out there that's flashier and nicer and etc. And I'm like, it's just a different version of what happened in 2008, where people went bankrupt instead for it to happen. This time, it's people are doing really well. They're like, you know what, let's take this as an advantage to kind of flip that narrative, because we know how aware the consumer is about data issues, about the quality of products, and their buying power is quite a lot. And I wouldn't support a lot of it, but it's the narrative that's happening right now, especially with some of the larger firms. Just kind of like the Amazon step down of Jeff Bezos. He was getting quite a lot of slack personally, and he needed to separate from.
Oh, he had to step back because he is just a mean little psychomass fucking gnome.
I'm giving him a break because Leonardo DiCaprio was going for his girlfriend. I don't know if you saw that.
I didn't know that. Well, Jeff Bezos, touche, motherfucker. That's what you get for leaving McKenzie, which was probably the best thing you ever fucking had in your life. But anyway, there you go.
But yeah, I think corporations are taking advantage of knowing that customers or people are more aware of some of the stuff companies are doing. And Facebook is the poster child right now of that. They've had privacy issues, anti-monopoly fines, and a bunch of other stuff slapped on them. One that was kind of hidden was Visa. Visa had a anti-monopoly thing with PayPal and I think Venmo or something like that. But basically, they're doing something that causes people to use Visa more, and it's anti-competitive and stuff. Yep. And they're also rebranding to start incorporating Bitcoin and stuff. So I'm like, yeah, people are they're just changing the narrative now. They're just taking advantage of it.
Put a different sign on the door and hope everybody forgets.
And hope everybody, yeah. And again, if I was Elon, I'd start doing that as well. Separate Tesla.
Yeah.
Take my profits and kind of
leave.
Do the thing you said.
Slink off into the distance. Just go away, Elon. Go the fuck away.
He promised us privatization. He might as well give it to us now.
You fucking guy. What a lying sack of shit. Oh, that was a joke. Well, you know what? If it was, you're still the official voice of the company. You jackass. Anyway. So anyway, I've totally, driven away our listeners. Because of my fucking rants. I'm sorry, guys. I tend to probably piss people off with this. So what else do we want to cover here? What did we miss? Is there anything we haven't hit yet? Or kicked?
I think that's it.
I think that's it. We
rubbed its nose in it. Well, I want to thank our listeners, the ones that were there and the ones I drove away. Thank you for listening in. Really appreciate your cooperation and participation. Next week we will be back. Joseph will most likely be on board because he sounded like hell. So hopefully next week he'll feel a lot better. And then maybe we'll even have Maddie. That'd be kind of cool. But thanks for being here. And thanks for listening to us rant, or me rant. These guys actually talked intelligibly. I'll pick it up again next week with you guys. See you again for another version of Vishal and Company. Man, that's we're really glad you showed up. Bye.
Thank you.